Hey guys, how's it going? Welcome back for another weekly options trade idea video. And not a lot of earnings happening this coming week. So look at the earning whispers chart here. Really, there's only three, I think, decent companies that I see on my radar that I might think about playing. And on Monday, that's Lennar. If you're not familiar with them, they are a home building company similar to Toll Brothers or Ryan Homes and companies such as that. The other two that I'm actually more interested in are Tuesday after close, and that's FedEx and Adobe. Now, I already know Adobe is a very expensive share price. I think it's in the hundreds. I mean, I think it's 300 or 400 if I remember correctly, but we'll take a look at it. FedEx, I'm not sure what it's trading for, but I am bullish on FedEx because I think a lot of people have been mailing things, and especially now with all the hubbub about the United States Postal Service and them not making money and certain people wanting them to go bankrupt, I think FedEx might have a little bit of a bullish trend this week. Either a run-up to earnings, and then hopefully they'll beat earnings and maybe have another run-up after that. But you can still play IV Crush if you play it properly. The other ticker I was looking at Tuesday before open was Cracker Barrel. They're a restaurant if you're not familiar with it, but being that they're a restaurant, I am very bearish on them because I'm sure they were hit hard, just like all restaurants were, in terms of the recent illness. So let's get right into it and check out some of these tickers. So let's just start off with Lennar. I'm here in our Discord server and we'll just take a look at some quick technical analysis with our bot here. And let's see what the graph looks like so far on ticker symbol LEN. So as we can see, it's currently trading for just under $78. Looks like the RSI is not really overbought, not really oversold, but a little bit more towards the overbought side. Has been trading flat for the past few days, so we'll have to take a closer look at that. Let's take a look at Adobe. That's ticker symbol ADBE. We'll take a look at the same thing, RSI and MACD, see what that graph shows. And Adobe is one of the more pricier tickers. It's trading for, you can see, $471 right now, so very expensive to trade cash grid puts on. So this might be a ticker where if you don't have a large account, you may want to think about either call credit spreads or put credit spreads, depending on how you want to play earnings. Or if you want to do both, you can think about iron condors and basically play for IV Crush. But also similar, actually trending down the past couple of days in the run up to earnings. So we did gap up here. That was about a few weeks ago. So it's interesting that we didn't really see a lot of drastic movement, I would say, on Adobe. But you can see as of the earliest in September, it was trading around $530 and it's dropped about $60 since then. So, you know, we'll have to wait and see how the market opens overall, but not really liking the graph on Adobe. And we'll take a look at the premiums on these in just a few minutes. So let's just take a look at Cracker Barrel now. Their ticker symbol is actually backwards in my opinion. It's actually CBRL. You would think it would be CRBL for Cracker Barrel, but it's actually the opposite. And we'll take a look at the same thing, the RSI and the MACD, see what that shows us. And Cracker Barrel, again, it's one of those restaurant companies, and as we all know, restaurants have been shut down and they're slowly opening back up and not at full capacity. So I'm expecting a poor earnings on Cracker Barrel, so a call credit spread might be in the works, or bearish play in my opinion. But as we can see, actually for the past few weeks, it's been trading pretty flat within a channel of about 130 to 140. RSI is also pretty much right in the middle as well. So keep an eye on Cracker Barrel. It is a little bit on the pricier side, but me personally, if I was going to play earnings on this, I would definitely play it to the downside. I would personally be bearish on this just because I don't think any restaurant company right now is going to have good earnings considering what has happened in the past few months. And lastly, let's take a look at FedEx. Same thing. We'll take a look at the RSI and the MACD here. FedEx is probably the ticker that I would be most likely to play because I think they're going to have a bullish run up to earnings, and I also think they're going to have good earnings. So I think they're going to go up, and as we can see over the past few weeks, kind of a constant line up and to the right, which is what I expected. The only negative here is that RSI is a little bit closer to the overbought category, and it is a little bit on the pricier side. You would need about $23,000, actually a little bit more than that, if you wanted to sell a cash grid put on it. But again, if you're bullish on it, you could open up a put credit spread or play both sides and open up a wide iron condor if you wanted to. But we'll take a look at those four tickers and take a look at what the premiums are on Robinhood. So again, just starting off with Lennar here, let's just take a look at the 5-year graph. Kind of been choppy, right? Up and down. here's peak illness. It got hit really hard, right? It went from $70 all the way down to basically half, actually less than half, at $33 and some change. But now we've hit all-time highs again. So we'll have to see. I mean, all news reports kind of show that the housing market has been booming relatively recently, but I think that's a bubble in my opinion, because it does not make sense that housing prices are going up, and prices are going up because mortgages are so low, so people can get mortgages at a very low interest rate. So to me, this sounds a lot like 2008, where people are potentially buying houses and getting into mortgages that they can't afford. And if unemployment keeps rising and people start losing their jobs, well, there's no way they're going to be able to afford their mortgages if they have no income. So that's why in the midterm, I would say mid to long term, I'm actually bearish on housing companies such as Lennar. But I guess right now in the short term, people are very bullish on them just because housing sales, I've been told, have kind of gone through the roof, no pun intended. But let's just take a look at the options on Lennar. I've never traded these, so let's see what they go for. So selling a cash good put at the money, you would get $283, right here, $2.83 per share times 100 shares, divided by $7,750 in collateral. So let's just see, that comes out to a return on risk of 3.7%, which is honestly not that great in my opinion, considering some of the premiums that we were looking at last week, and considering that VIX it's still in the low 20s. I think earlier last week when we looked at the same options trade ideas, VIX was in the high 20s to low 30s. But I mean, on a good day, I feel like you could get 3.6% on a ticker like AMD. So not too impressed by that. Also, volume is very low. Open interest is relatively low. Bid-ask spread is not that wide. It's only about 25 cents apart. But yeah, personally, I think I'm going to stay away from Lennar just because I don't know what it's going to do. I suspect it might have good earnings, but I think it's a bubble personally, and I don't want to end up bag holding shares of Lennar because I think mid to long term we are not going to be that bullish. I actually think we're going to be bearish personally. Let's take a look at the next ticker. Let's look at Adobe. So I know Adobe is a very pricey ticker at, $473. Let's take a look at the 1 year graph. So basically up and to the right, which is what you want to see. 5 years also straight up like a rocket. So let's just see where it's done. So here's peak illness, right? Pre-illness, it was about 383, dropped down to 285, and we've been hitting all-time highs since about June, where much recently we were at 533 before this recent drawdown the past week, and now we are down all around 462. So we've dropped almost $70 in the past week or so, which not really that great, but then again, the whole market has dropped, so you can't really fault Adobe for that. Let's just take a look at the at-the-money premium. So selling a put for this coming Friday, $1,968 or $1,968 in premium for $47,250 in collateral. So that is going to be a return on risk of just a little over 4%, so 4.2%. Better than Lennar, but again, not really that great. And honestly, I personally think that if you had almost $50,000 of your portfolio, you'd probably be better off, trading multiple different tickers to diversify than just opening up one cash good put on AMD. That's just my personal opinion. But I mean, if you have a portfolio that's hundreds of thousands of dollars and you could open up one of these and a couple of other tickers, that might be a better play. Again, not financial advice, just my opinion. But personally, if I were to play Adobe, credit spreads, either put credit spreads or call credit spreads would be the way to go. But just looking at the way that the chart has been, even the past, let's say, week and month, let's actually go to 3 months, it's still been up and to the right. I'd probably be more inclined to be bullish on this ticker and open up a put credit spread, but that's just me. Let's take a look at the third stock here, moving quickly. Let's take a look at Cracker Barrel at CBRL. Again, let's take a look at the 1 year chart here. So really flat, right? All in 2019, early 2020, pretty flat. It was about 166, 168 pre-illness, and then it got hit really hard, got all the way down to $56. So basically got knocked down by 66%, right? It got down to a third of what it was trading at. Has slowly been rallying back, but we're still not back to pre-illness highs. So we are currently at 136. So again, I am going to be relatively bearish on Cracker Barrel. If I did want to play this, I would personally not want to sell a cash good put because I probably would not want to be assigned shares of this ticker, because if we end up locking down again, or if the illness comes back or starts to creep up again, I don't want to bag hold these because if restaurants get shut down again or we go into lockdown again, this is not going to be a good ticker to bag hold. So if anything, I'd probably open up a call credit spread because I'm bearish on this and I think the ticker is going to go down during earnings or after earnings. So let's just see at the money puts, if I were to sell a put on it, just see what the premium would be. $495 divided by 13,500 in collateral. So it's again about 3.7%, which is not that great. So I'm not too impressed by these premiums so far. But again, I probably would avoid Cracker Barrel personally. I'm not interested in the company. I don't want to bag hold the shares. It's probably going to go down. Really not appealing to me whatsoever, but it had earnings this week and I recognize the company. I know what they do. So I figure might as well look at it. Not going to hurt. And lastly, let's take a look at FedEx. This is probably the company or the ticker that I'm most likely to play earnings on this week, just because I know what they do. And if you take a look at their 1-year graph, has been slowly rising over time. Take a look at the past 3 months. Again, just consistently going up. And again, with the USPS in turmoil a little bit, if you want to call it that, you know, FedEx and other shipping companies like UPS, they're the ones that are going to benefit from this. So let's just take a look at FedEx options. The only thing is it is a bit of a pricey ticker at 237. But again, let's just see what the cash good put premium would be at the money. So $1,295 divided by 23,500 in collateral. So that is going to be a return on risk of 5.5%. So yeah, I mean, if I had to rank these 4 tickers right now in terms of what I like the best, I like FedEx because of all the tickers, I'm most bullish on them. They also have the juiciest premiums right now at 5.5% at the money. Second would probably be Adobe because again, they're a digital company. They make software. So it really benefits people that are working from home or staying at home. So that would be my second pick because I would also be a little bit bullish on them as well, given the recent climate. Third, and I would put this as a distant third, would probably be Lennar. And then fourth was going to be Cracker Barrel, but that's a very far fourth. In fact, I would hesitate to even put them on this list. I would just go with 1, 2, and then a distant third, and just avoid Cracker Barrel personally altogether. So let's just take a look at my other go-to stocks, because if you've been following my videos for a while now, and if you saw my video from last night, you know that right now I am holding 200 shares of AMD. So let's just take a look at what AMD's been doing over the past year. So steady growth for the past year, which is why I'm happy about holding these shares. I know they're not a meme company. I know in the short, medium, and long term, I believe that they're going to have a strong future. So I'm okay with that because right now it is trading about $10, actually $9 below my cost basis. But I'm okay with that because I think they're going to rebound. So let's just take a look at AMD, because my question now for this coming week is at what strike do I sell my covered calls for? Because my cost base, let's say we open up Monday morning at 76, right where we closed Friday. My cost base is at 85, not accounting for the premium I received. So I would collect only $28 in premium if I sold covered calls at my cost basis. And I say only because it's not that bad. $28 in premium divided by 8,500, right? Because it's $85 per share, is still a return on capital of 0.3%, which is not bad. I mean, if you think about it, if you can do 0.3% every week times 52 weeks, that's 15%, or actually going to be more than that, not accounting for compounding. So that still beats the yearly average for the S&P 500. So that's nothing to kind of shake your finger at. So I would be personally happy with that. But my concern would be that if AMD keeps dropping, let's say we open up Monday below 76, let's say we open up at like 74, well then I'm going to collect even less premium than $28. I'll probably collect something like $21 or $15. So then my return on risk or return on capital would be about 0.2%, let's say. So at that point, I may want to look into opening up a covered call less than my cost basis, you know, just because I can collect a little bit more premium, and with the thought that I don't think that AMD is going to hit, let's say if I pick $82, I don't think AMD is going to hit $82 by end of day Friday, then I can collect max profit and collect more profit than if I did if I opened up at 85. And then for the following week, just keep opening up covered calls until AMD rises above my cost basis and I want to get my shares called away. So same thing with Space or Virgin Galactic, because I currently own 200 shares of Virgin Galactic I was assigned at $19 a share. So it's currently trading at $16.68. It's gotten hit hard for the past 2 days. You can see we kind of peaked around 1839. So at that point, my covered calls were looking pretty good, meaning I could collect good premium selling covered calls at 19 because it's not that far out of the money. But then the past 2 trading days, we kind of dropped all the way down to about 16 and some change. So if I look at selling covered calls right now, if the price stays at 16.68 when we open on Monday, my covered calls are only going to be worth $17 at the 19 strike. It's still not that bad because $17 divided by 1900 in capital is still going to be a 0.9% return on my risk, which is actually better than selling my covered calls on AMD at my cost basis. So again, the dollar value seems low, but compared to the amount of capital that I have tied up per contract is actually a good ratio. It's 0.9% return on my capital. So even if space opens up at 16.68 on Monday, I most likely would just still go ahead and sell these covered calls. But obviously the better situation for me would be if we gap up Monday and let's say space opens up at like 17 or 17.50, because then these are going to be less far out of the money, and then maybe I could collect $22, $29 or something in the 20s and get a little bit more return on my capital. But yeah, that's the trading week for this week in terms of earnings coming up and what my potential plays are going to be, given that I hold 200 shares of AMD and 200 shares of Virgin Galactic. Also, just a friendly reminder that this week the Fed is going to have their last meeting before the election, so keep an eye on that. I was reading through this article here on CNBC, and there's a paragraph here that says that obviously this is the last meeting before the election. Analysts expect the chairman, Jerome Powell, to sound reassuring and that the Fed will do whatever it takes to support the economy. So hopefully this will give us a much needed pump. So just keep that in mind. Looking at the schedule, on Tuesday is when the meeting begins, and then it lasts until Wednesday as well. You can see at 2:30 p.m. Eastern time on Wednesday is when Jerome Powell is going to give his briefing. Then also the week ahead, Thursday, as we always do, in the morning, we're going to have our weekly jobless numbers. So keep that in mind when placing your trades, because the 2 tickers I mentioned earlier, Adobe and FedEx, all have earnings after market hours on Tuesday. So we may have a little bit of volatility depending on what happens during this meeting during the day Tuesday. So just keep an eye on that. But yeah, that's my synopsis for this trading week ahead. Let me know what options and stocks you're looking at possibly trading today. If you're not in the Discord server, get in there already. We've already filled up our most popular tier spots. So if you're not in there, you are definitely missing out. We are most active during market trading hours. If you have any questions or comments, leave them in the YouTube comments below. And as always, happy trading.